Hey team, our first analysis of the month is on pound-USD. It's an awesome analysis. It's really fun, and we're gonna actually take it down to the 15-minute time frame. And if you know me, we rarely get down that low. So what I'm gonna try to convey, and what I hope you notice, is how you can actually identify low time frame, and I mean low time frame opportunities, even from the monthly time frame. All right, so let's start. Pound USD, pull out your charts. Let's go through it together. Okay, starting on the monthly as usual, we look for horizontal sell pressure, horizontal buy pressure. We identified our monthly upper and our monthly lower zone. We identified our downtrend because we see lower highs, meaning if price does come back to retest this downtrend, there will be sell pressure. So this is an important area of sensitivity. All right, so after we identify area of sensitivity, what do? We talk flow. We try to understand what the time frame is telling us. So we see sellers take control at our monthly upper zone and our monthly downtrend. Strong push to the downside, breaking right through or right below our monthly lower zone. What's after a push to the downside? That's right, an exhaustion. To the upside, sellers re-entered the market where? At our next area of sensitivity, which was our monthly lower zone, which is expected. So here we are with the continuational push to the downside. And this is where it gets interesting when we take a closer look at price action. So we're staying on the monthly and we're taking a closer look at price action. And what's the first thing I noticed? Okay, we're still on the monthly time frame, and this is where it gets interesting. So the first thing I do whenever I see any new pair, on any time frame, I look for horizontal sensitivity. That's just naturally what I tend to do. So here I immediately see horizontal sensitivity. So let's add a really nice horizontal line and take a closer look at this area to see how we would identify a lower time frame trade from the monthly. Okay, still on the monthly, as you know, we just identified horizontal sensitivity identified by this black line. Now, what's important to remember, this is a monthly area of sensitivity. Price respects its elders. The higher the time frame, the more respect towards area of sensitivity. Now, after we identify area of sensitivity, what do we do next? We talk flow. Now, based on this alone, how can we see a potential opportunity going down even to the 15-minute time frame? It comes down to one thing. It comes down to push and exhaustion cycles. So what is the definition of a push? A definition of a push is price breaking, whether it's a zone or a trend line, to the upside or to the downside. So price needs to break an area of sensitivity for it to be considered a push, because we know that area of sensitivity is very hard to break. And like anything that's hard, it requires energy. So when price breaks, whether it's to the upside or to the downside, that's a push, because it broke an area of sensitivity, meaning it required a significant amount of energy. And what's after a push? That's right, an exhaustion. That's a rest period before then price makes a continuational movement that requires additional energy. So keeping the push and exhaustion cycle in mind, this candle right here tells me everything I need to know. And why? Because this candle broke below this area of sensitivity, which price failed to do many times before on the monthly time frame. Now, so is this candle close considered a push? The answer is yes, because it broke below our area of sensitivity. We know there's going to be a lot of buy orders at that area of sensitivity like we see in the past, hence these pin bar closes. Price managed to push and break below, and that makes this a push. So what's after a push to the downside? That's right, an exhaustion to the upside. So we know that price will come back for an exhaustion before a continuational push to the downside, because it has to. It requires a lot of energy to break below an area of sensitivity or above an area of sensitivity, especially on the higher time frame. So that means that price has some space for exhaustion until it reaches our area of sensitivity where the next wave of sell orders will be placed. Remember, this is the monthly time frame, so that's a lot of space on the lower time frame. That's a lot of pips to catch on this exhaustion. So this is how, on the monthly time frame, we already can identify a lower time frame potential long for exhaustion. All right, let's continue. All right, we're going to zoom back out now, take it down to the weekly time frame. We identified our weekly mid-range zone by identifying horizontal sell sensitivity. So here we see that monthly push to the downside, monthly exhaustion, double confirmation with two sets or two waves of sell orders entering the market. Strong push to the downside, breaking right below our weekly mid-range zone. Price came back for exhaustion, but what do you notice? We see a failure of a continuational push to the downside. Instead, price is now in consolidation, telling me that there is buy protection. There are buyers trying to keep price to the upside, and that makes sense because when we take it back to the monthly, we see that price is extremely low. There's a lot of vested interest that price does not devalue too much from government, from institutions, and from actually other countries around the world. Now, why would other countries care about pound USD? Because it's important that countries have debt. If another country has your debt, they have vested interest that your currency does not devalue too much because they want that back. That's why all countries have debt. Now, too much debt is not good, but all countries need to have debt for that reason. So price is having a hard time, or will have a hard time, breaking lower low to the downside because a lot of people and a lot of big organizations have vested interest that price does not go too low. But as you know, political or fundamental events can push price in any direction very strongly, and it takes time to then rebound and manage that. So really what I'm trying to say is that the reason why we're seeing buy sensitivity on the lower time frame is because price is already low in value, okay? There is a lot of vested interest to move it to the upside. Okay, taking it to the daily time frame, here we see our daily mid-range zone. Here we see our higher time frame consolidation. Price is playing in between its weekly mid-range zone and also the area of sensitivity we identified on the monthly. Now remember, if you're asking yourself the question, how is this an area of sensitivity because price is trading below? Remember, on the monthly, that's simply a pin bar. Okay, so here's where it gets interesting. Here's that monthly bearish engulfing candle we spent so much time speaking about. As you can see, this bearish engulfing candle closed below area of sensitivity, and the other candles failed to do so because even though it's trading below, by the time of candle close, price was already above area sensitivity, causing pin bar closes. This bearish engulfing candle managed to close below area sensitivity by the time of candle close, telling me that this is a push. And as mentioned, after a push to the downside, there's always an exhaustion to the upside. So let's take it down a time frame and start looking for that lower time frame long opportunity to capitalize on that higher time frame exhaustion. All right, on to the 4-hour time frame. Here's the width of what the candle would be on the monthly time frame. Okay, so here's the completion of the push. Now we're looking for exhaustion to retest area sensitivity before then the next wave of sell orders hit the market and we see a continuational push to the downside. Okay, down to the hour time frame. Now, nothing is clear to me in terms of our hourly mid-range zone. So if there's nothing clear, you don't need to add anything because there's nothing there. So one thing is clear to me, and that's this respected lower time frame downtrend as we see lower highs. Now, what do we see? We see a break to the upside with the push. What's after a push? That's right, an exhaustion. So potential proper entry for that continuational push to the upside coming up. And now, for the first time in a very, very long time, we are on the 15-minute time frame. So here's that hourly push to the upside. Here's that hourly exhaustion. We will wait for price to break its 15-minute downtrend to the upside with the push. We're waiting for a 15-minute exhaustion and then price action confirmation to the upside. Price action confirmation must be an hourly bullish engulfing candle, not a 15-minute time frame bullish engulfing candle. So that's it for pound USD.